Hey fam, yeah, welcome back to my channel. So today we're talking about sustainability. Sustainability was a major thing that was added to the new syllabus actually. Although other things were added, but when the study packs were released, the major additions to the study pack was on sustainability. That was chapter 3 and chapter 8. So I summarized those chapters and I created this document. So this class on sustainability will be divided into two sections. So in this particular section, we'll be looking at the introductory aspects, and in the second video, I'll be showing you how to analyze and interpret sustainability reports. So the first thing I want to even say before we even start is that a lot of people think that sustainability is just about the environment, but it's way, way, way beyond that. And today I'll be showing you other aspects that probably you haven't thought about before. If you have not subscribed, please hit the subscribe button and share this video with anyone you know benefits from it. So now let's look at this document. What is sustainability? Sustainability means protecting our environment and creating a safe world for people today and in the future. So in this case now, just like I said, yes, you are right. If you were part of those people that thought that sustainability was majorly about the environment and protecting it and all of that, yes. But then look at the next thing. It is not just about the environment. It covers people, it covers the planet and prosperity. So those are the three things that sustainability covers. It's not just talking about the environment alone. Yes, the environment is a section of what sustainability entails, but it also covers people, and it also covers what prosperity, which is peace and economic growth. So what's that talking about now? Let's look at those three things so that you can understand better. Now, there are three pillars of sustainability. Think of it like a table with three legs. You know, if one leg is not there, the table will collapse. If you put something heavy on the table, everything will just fall off, right? So these are like the three pillars as well. Like the three legs of sustainability, they all work together. Everything has to be in order. Now, I'm using the illustration of a table so that you can relate to what I'm saying. So please follow me closely. Now, the first thing is people. People, what is people talking about? People is talking about social equity. And this aspect of sustainability is saying that we want to end poverty, hunger, improving health, education quality. So sustainability, when we say we are protecting our environment, when we say we are creating a safe space for the current generation and the future generations, when we say we're doing that, what we're talking about is that we are ending poverty. Like when we talk about people now, we're saying okay, for there to be a world that is safe and peaceful, we have to ensure that hunger is like not existing anymore. We have to ensure that poverty ends. We have to ensure that education is less quality education and all of that you get. Then another aspect is saying that that is now the environmental protection. Okay, if we are saying that we are really protecting people, we're ending hunger, we are ensuring equality, we are ensuring hunger ends. But then the place where the people that are not hungry will stay uncle, you understand? So we have to also protect our environment. And how do we do that? We fight climate change. You know, the ozone layer is depleting, all of that. You understand? We protect our water, we protect our land, we protect our ocean. Now, apart from that too, we also have to look at our economy. We also actually have to see how we can ensure that there are jobs, ensure there's growth, there's innovation, there's partnership, and economy is saying that we should live in peace and prosperity. Understand? So now these three things, what is it now? Let's now put it all together. So now what it means is that for us to have a safe world for the current generation and future generations, we have to ensure that the people living in the world, they are fine. That's in terms of no poverty, no hunger, or there's quality education. We also have to ensure that the planet, that's our environment now, is protected. Because those people have to live somewhere, right? And then we have to ensure that the economy is prospering. It's prosperous, you understand? It's prosperous, you understand? It's prosperous rather. You understand? So those are the three things that we have to put together. Now, I know that there's a question that may pop up in your head right now, and you'll be like, "Ah, we're doing case study now. What's our business with sustainability?" Yes, it's your business because you are actually writing Ican. Why are you writing Ican? You want to be a professional accountant, you want to be a chartered accountant, right? So these are issues that are facing the world today. These are issues that a lot of people are trying to look into sustainability. So you have to know it. You have to be aware. You understand? You cannot just you're not just an accountant that will just be saying, "Oh, revenue minus cost equals to gross profit." No, you also have to be aware of these issues. And now, in case study, we are going to be analyzing the financial information of a company and also the non-financial information of the company as well. Now, companies are now producing sustainability reports. You understand? So if they give you a case study and they're asking you to assess a company, they may probably give you the sustainability reports to assess. So you have to be aware of all these things. So don't say, no, I beg, it's not a business. Let me just go and do ratios. You have to be aware of these things. Now, let's look at the SDG goals quickly. And the SDG goals are 17 goals that were created by the UN in 2015 with the hope that by 2030 we would achieve it. That's 5 years away. Let's see how it goes. And then these are goals that they are saying, okay, like I said, sustainable development goals, like they are global goals, like everybody around the world. Let's try to put our hands together to ensure that we achieve this. And now they said that what achieving SDG requires both the public sector and the private sector. You understand? So now, as a chartered accountant, when you get your certificate, you would probably work in the public sector or the private sector. So if you don't know anything about sustainability, then that will not be good. You understand? So you have to know it. Then governments are the ones that will set the laws and fund the projects. Then the businesses are the ones that will adopt those practices, right? And invest in sustainable projects. So in your case study examination, they could tell you that, okay, this company wants to invest in this sustainable this project that would protect the environment. Okay, help us to assess it. Is this project viable? Is it not viable? Is it good? Is it not good? And again, they may even give you a project, and then the project would harm the environment. You have to tell the company, oh, yes, so financial aspect good, MPV is positive, but you see, this project you cannot embark on it because of what? Because it's going to affect the environment. You cannot tell them that, okay, the only way that this project can be embarked on is if measures are put in place to ensure that these challenges that could affect the environment are dealt with. Something like that. I'm just trying to give you a scenario that they may, because I'm relating to case study. Let's not walk far away and forget where we're coming from. You understand? So what I did now is you can see that there are 17 goals. So I categorized them under the 3 pillars. You understand? Under the 3 pillars: clean water, no poverty, no hunger, and all of that. So that's just by the way. Let's not go deep into that because we are doing case study, right? All right. So now, sustainable business. Now, what is a sustainable business? I want us to look at this very well. Now, what is a sustainable business? Now, pay attention to this place. Now, a sustainable business is a business that considers sustainability. You understand? It considers sustainability. Now, you can see that a business is considered sustainable when it goes beyond profit. Now, in this case, now we're not just concerned about, oh, this project, does it have positive MPV? This project, it's going to give me a payback period that I want, or something like that. Previously, that was a concern. Now, if you notice from previous diets, if you look at past questions, you see that the question will always say use MPV or use contribution analysis or something like that. You understand? That was the focus. But now we're going a step beyond that. You understand? Fine, yes. It's not like only sustainability we are going to be concerned about. We are a business. We want to be profitable. But the first thing is, okay, this business or this project, is it profitable? Okay, yes, it's profitable. The next step is that, okay, now, does it affect the environment positively or negatively? The people around, is it going to end hunger? Is it going to end poverty? Is it going to impact lives? Now, that is the full focus. Don't forget the illustration of the table that I told you. If one leg is missing, everything crashes. You understand? Everything will crash down. So everything is very important. So companies like this, companies that are concerned about sustainability, they usually have stronger reputations. Investors are usually interested in investing in those kind of companies. And then legal issues, they barely have legal issues, except other things, you understand? But legal issues concerning sustainability and environment protection and all that, they would avoid it. So these are things that you can also say. You understand that, oh, when if they give you a case study and then they're telling you that the company wants to consider sustainability or something like that, you can say, oh yes, this is good. And in addition, this would strengthen the reputation of the company. This would help the company avoid litigation, possible litigations concerning the environment. So I'm just trying to wrap your head around possible things so that you can know what to do. Now, let's look at triple bottom line. Now, triple bottom line. Now, don't forget the three pillars. Like I said something, I recall that the three pillars of sustainability are what? People, planet, and prosperity. Now, the triple bottom line is saying that what? It is the two companies use internally. The two companies use internally to measure and report their what? Their performance in these three areas. They use it to measure and report their performance. So I use the word internally. Now, I want you to liken triple bottom line, liken it with management account. Yes. You know, the management account of a company is an account that is used by the management. Yeah, ledger. Management account is used by the management. But that's just simple thing. Let's not complicate anything. So that same way, so triple bottom line is the two, like for instance, when companies want to like create sort of like a management account, okay, like a sustainability report that we are going to use only for ourselves, a sustainability report that is just for the consumption of the management, the board of directors or something like that, then we'll use triple bottom line. We use it to measure and report on our performance concerning people, concerning the planet, concerning the prosperity. That's the economy. You understand? Like I said now, the two used by companies to determine the impact of their operations on the environment, their financial results, and how well they treat their employees, their customers, their community. You know, this is people, planet, and profits, basically. Now, the good thing, or should I say bad thing, depends on the situation actually, is that the triple bottom line is not bound by international rules. So there's no rule that is binding this. It's just, as I say, liking it to what? Liking it to management accounts. Management account is coming to fight you that, why did you put 15 naira here? Nobody's fighting you because it's internal. In fact, it's like confidential information in the first place anyway. So nobody is fighting you that this use this rule or use this regulation. No. And now I gave some examples. So profits, you can say, okay, the company profitable. You can check what's their revenue, what's their profits, what's their shareholder value. In terms of people, are they check it? Okay, what's the employee welfare? Are they good to their employees? Are they paying fairly? You understand? Are they satisfying their customers? Look at the planet too. Oh, what is the emission? Like emission, now think of emission like a factory that is emitting monoxide or emitting smoke. Let's use a simple word. Emitting smoke into the atmosphere. Okay, how much are they emitting? Are they emitting too much? Are they emitting too little? So what is their waste pollution? So these are the things that the company would consider when actually assessing. But the truth of the matter is, the one limitation of sustainability is that it's subjective, yes, and it's not really like, let me not say it's not really accurate in that way, because how will you say you want to measure waste pollution or you want to measure employee welfare? Is it that, how many times did my employees smile or how many times were they happy? I don't really know. So it's like there are lots of subjective like things around it. That's just by the way. Now the advantages of triple bottom line is that it provides a complete picture of the company's performance, not only considering profits but also considering the social and environmental impacts. That's clear, right? However, applying triple bottom line comes with challenges, like I said, difficulty and costs of collecting reliable non-financial data, you understand? And like I said, the measurement is what is subjective. It's subjective, you understand? So there's a lot of challenge that is around that, and the fact that it's not even like bound by strict rules and regulations, so everybody can do what they like. So let's just say any sustainability report that is prepared by using triple bottom line like approach, know that one is not reliable. So triple bottom line is like an approach, a tool, a method. You know, when you think of method, think of like, you know, for instance now for financial statement analysis, now we'll say methodologies we can use are ratio analysis or trend analysis. So think of it like that triple bottom line is a tool that is used to assess the sustainability report. So when a sustainability report is assessed using triple bottom line, even if they say it in this case study report, just know that professional skepticism, you must mention it there. You question the reliability and accuracy of that data, you understand, because there's high tendency that data that they're providing, that information they're providing, or that report would not be accurate, because there's no strict rule, it's subjective, there are a lot of comma there, you understand. So now let's look at sustainability reporting or ESG reporting. Now, ESG reporting, that's ESG means environment, social, and governance, or something. I think environmental or environment, something like that. Social and governance. So now, sustainability reporting, this is another tool. Now, it is a formal reporting system used by companies when they want to publish their performance. You understand? So in this case now, if it's a situation whereby we have to publish our performance, probably we have investors that want to see, or we have shareholders that want to see, or the public is concerned about our sustainability matters or something like that, then we cannot use triple bottom line. Like I said, even if we use triple bottom line, everybody would raise the professional skepticism, because the accuracy and reliability of that data is just like low. You understand? So when it's internal, when we want to just use it for ourselves, we can do triple bottom line. But you see, when it's not a situation that requires taking our reports outside the four walls of our company, then we have to use ESG reporting. ESG reporting or sustainability reporting is a formal reporting system that we usually want to publish our performance on those three pillars. And then it makes use of international standards. Yes, international standards. In FR, financial reporting and corporate reporting, you have your IFRS, you have your IAS and all of that. So in this case now, yes, we have standards as well. We have the GRI, the Global Reporting Standards, we have the International Sustainability Standard, the board. The board is the ones that actually creates those standards. We're going to look at all those very soon, the IFRS S1 and S2. We'll look at that very soon, but let's take it step by step. And the reason why I'm breaking this video down and taking it step by step is because I know that as a case study student, you're used to calculations. So when is that theory, I can, what's this? You understand? And the fact that in the textbook is like over 30 something pages in one chapter, almost 10 pages, is a lot. So that's why I'm taking my steps to break it down, and my time rather, to break it down so that you can understand. All right, and that thing again is that the report is usually structured and verified. So it's not like triple bottom line, where whatever we like we'll do. No international law or strict rules is binding us. No, in this case, we are bound by some rules. It's verified. We have to look for an independent external party, that's an external auditor, to come and check it, to verify what we have done. There is a structure that everybody must follow. It's just like IS1. IS1 will say, when you are doing your income statement, start from revenue. After your revenue, go to cost of sales. After your cost of sales, move to gross profit. That's a structure, that's a standard. And the good thing about it is that it aids comparability. Do you understand? It aids comparability. So because when everybody is using a particular thing, we can easily compare. But if everybody is using triple bottom line, how would we compare? This one is doing this one, that one is doing this one. Who are we going to say is better than who? Do you understand? But when we're doing sustainability reporting, everybody is using the same thing, so we can easily compare. Now, it's usually prepared for outsiders. Like I said, we're publishing it, so it's definitely going outside. But there are some challenges as well. It's not like, all that glitters is not gold. They also have some things. In Nigeria, the challenges include voluntary adoption. Not everybody is willing to adopt it. Not everybody has adopted it yet. Then low understanding. So people don't understand what are we doing now? Or we say I should be measuring waste, pollution, measuring emissions. So there's a lot of understanding. People don't really understand what it's about. Then unreliable data, insufficient expertise, high costs and corruption, limited technological support, so many challenges as well. But at least the fact that there's even a standard, a structure is better than triple bottom line in every way. So I created a table where I actually gave the differences between the two. You can see that triple bottom line is internal, this one is external. This one is used by management and employees, this one is used by external parties, this one is not bound by strict international standard, this one is guided by class standards. And this one focuses on the impacts of business on people. So how is the business, how is our operation affecting our employees, the people, affecting the community, the people? How is our, or how is our operation affecting the planet, the environment? Are we causing pollution? Are we causing air pollution, water pollution? What are we doing? How is our activity affecting like our profits? So that's what triple bottom line is talking about. But you see, the sustainability reporting system is talking about how in this environment, social and governance, how it affects the finances. So now in this case, now we're looking at how the environment is affecting our finances. Okay, is it that because everywhere is polluted, we're not doing well? For instance, now let's look at the water company. Okay, let's look at probably Seaway. You understand? Seaway is a water company. Probably if the water in Nigeria is polluted, you understand? So that's like an environmental issue, right? So if the water is polluted, it's definitely going to affect their profits, because the water they are probably going to be producing would be polluted and people will not want to buy, or probably they won't be able to produce or something like that. Do you understand? So now in this case now, ESG is saying, okay, how is the environment affecting our profits? And the other way again is, how is our own activity to affecting the environment? So ESG is looking at it from two sides, but it's looking at monetary most times, you understand? And that's why you could probably have a little calculation, you understand? Might not like calculation, but it could have something related to calculation. So we're going to be checking, okay, how is the looking at it from the two sides: environment affecting the business, business affecting the environment in terms of monetary aspect, in terms of money. I hope it's clear. If you have any question, just go to the comment section and drop your question. I'll be there to attend to it. If you have not subscribed, how far now? And like my video, share. This is not easy. All right. So verification too. You can see that this one is not. There's no need to verify who is looking at it. It's not our business. But this one, you need an auditor or someone to verify. Now let's now look at IFRS S1 and S2. Now, the IFRS S1 and S2, they are global standards created by ISSB for sustainability reporting to improve what? Comparability, data quality, credibility, and investor confidence. So in this case, now you know, like we said, that the triple bottom line, there's no standard, there's no rule, there's no raw. But if you followed me closely, you see that when I was talking about sustainability reporting, that I said that they are guided by some standards, right? So one of the standards is the IFRS S1 and IFRS S2. This was issued by the ISSB. You understand? The ISSB. So, and what are the standards for? Comparability, data quality, credibility. See, once you know IFRS, normal IFRS, and normal IAS, what is the purpose of normal IFRS and normal IAS? Why? Why are they doing that? For comparability. Why are they doing that? For credibility. Why are they doing that for? You understand? So the same way to, so don't, sustainability, I don't know anything about it. It's still linked to what you know before. You understand? So to aid comparability. So now they help companies show how ESG issues affect profit. I've explained this now before. Like how, just like the Seaway that I actually explained, the water pollution and all of that. And then not only the company, but they also give information to stakeholders on how the issues impact. So in this case now, the ESG reporting is beneficial to the company and to the stakeholders. So when you're talking about stakeholders, we did not say shareholders or stakeholders. When we're talking about stakeholders, we're talking about the shareholders, we're talking about the community, we're talking about the government, the public, everybody that affects or is affected by the operations of the company. Understand? So we're giving information to everybody, and that's why you see that there's a standard. Everybody has a company A, company B, company C. They have to follow a particular standard, because if we're providing information, if we want to know that, okay, company A is doing better than company B, how do we know? Oh, based on the standard, this one's profit is low, this one's profit is high, something like that. You understand? So that's how we know. Now, I said, for example, now whether climate change increased costs or reduced profits. So we're checking now. Okay, in terms of the environmental issues, okay, now the climate is changing. So the climate change, did it affect us positively? Did it affect us negatively? Something like that. You understand? Now, IFRS S1 is talking about general sustainability disclosures. So now this one covers all aspects. Remember the 3 pillars, those 3 tables: people, planet, and profits. So in this case now, IFRS S1 is saying check everything. Check how the people, that's employee welfare, treating our customers right, how did it impact our profits? Check it. IFRS S1 is saying don't only check that, also check too how did climate change, how did the environment also impact our profits? We'll check that too. It's also saying that what, not only that too, also check in terms of profits. So check everything. You understand? So I used to say that I called IFRS S1 amebo. Put your nose in everything. But you see IFRS S2, IFRS S2 now not like stress at all. That one is just about climate related disclosures. That one just focuses on climate alone. That's on the planet alone. I beg, I know if you stress myself. I like IFRS S2 is in for soft life. You understand? So how climate change impacts the business and how the business impacts the environment. You understand? So just like I said, okay, climate change, how does it affect the business? Okay, climate is changing. Oh, when we talk about climate change, saying that, okay, for instance now, let's say in June rain is supposed to fall, but instead of rain to fall, it's hot. Let's say in December, summertime is supposed to be all over. The weather is supposed to be cold, right? But in December the weather is raining. You understand? Rain is not supposed to fall in December. But climate change, that's what I mean by climate change. Like things are unstable. You understand? Things are unstable. The weather is unstable, all of that. So you understand? So how did it affect the business? Did it affect us positively? Did it affect us negatively? So that was IFRS S2 is talking about climate alone. But IFRS S1 over Sabi uncle, over Sabi auntie is covering everything. Something like that. I'm just trying to joke, but hope you are getting the real gist. So I said something here that when preparing your case study report, you can raise a professional skepticism if you observe that the company did not use global standards. I've mentioned this before. So if you are seeing that the company used triple bottom line, fast, you know that professional skepticism is here. Someone not verify, standard, if I raise a professional skepticism there, so excuse me, IFRS S1 and S2 require companies to disclose information under 4 pillars. So when you're using IFRS S1 and S2, so you have to talk about 4 major things. So now these 4 pillars ensure the company's sustainability reporting is clear, complete, useful, showing how it manages the ESG risk and opportunities and the impact on the business. So what is this talking about? So these 4 pillars now, they're saying that what they are trying to ensure that, okay, but we cover everything. Like, you understand? So the pillars, that these are like things that you must disclose when you're using the standard. It's just like now, for instance, let me relate it back to income statement. Now for income statement now, you must disclose your revenue, you must disclose your costs, whether direct costs, indirect costs, production costs, overheads, you must disclose it. And you must disclose what? Your profits. So in this case now, for them to now say, okay, for us to capture the real sustainability issues of a company, they must disclose 4 major things. That's what he's talking about. You must talk about the governance, talk about strategy, talk about risk management, and talk about metrics and targets. So now, what's governance saying? Under IFRS S1, IFRS S1 is saying that talk about who manages the ESG. You understand? Talk about the board. Okay, who is in charge of your governance? Who is in charge of your environmental and social performance? Who is the person that prepared this report? Raise up your hand and show us. So when you're writing your sustainability report using IFRS 1, you say, okay, sort of like when you have your cover page. I'm just trying to relate it to things you know before. You have your prepared by, okay, who is the person that prepared it? You understand? So you state it there. IFRS 2, on the other hand, is saying that who is the person that manages climate issues? IFRS 2, that one, soft life, is only climate is talking about. So saying, okay, in terms of climate issues, who is the person? You say, climate issues managed by ABC. Just like you say, prepared by ABC, something like that. You understand? So you talk about that. Strategy. Now, that's what you should explain any plan. What is the strategy you have? What is the environmental and social governance plan you have? What is the impact you have? What is your future? Your futuristic plans? What is your current plan? Something like that. IFRS S2, on the other hand, is saying that what are your plans in terms of climate action? In terms of the climate, what do you plan? Okay, rain is falling in December. Meanwhile, it's supposed to be cold in December. Rain is not supposed to fall. but rain is falling. Okay, what are your plans concerning that? Oh, how do you manage this? How do you manage that? Okay, for instance, if it's an agricultural company now, if there's climate change where weather is supposed to be raining, but it's sunny, it's going to affect their business. Okay, what are your strategies to manage that situation? Tell us. You have to talk about it then. Then what? Risk management too. How do you intend to manage any risk? You understand? The IFRS 1 is saying all your risk. But IFRS 2 is saying your climate risk, the only ones relating to climate. Now, IFRS 1 concerning metrics and targets is saying that what? Report all your metrics. Your metrics is saying your measurements. You understand? How do you measure people? How do you measure planets? How do you measure profits? Like now, people concerning people now, like what I was saying, employee welfare. Is it that the amount of times our employee were happy or were smiling, or our employees rather were smiling, or what? So how do you measure it? For instance, now, if a company says the way we measure employee welfare is the number of times our employees smiled today. You know that company, people are not serious at all. Which is there are other things you can manage that. You can check in terms of their salary. Are they paid well? The conditions of work, are they paid? Are they having a good working environment and all of that? So there are other things. So that's why we want to know how you measure. Don't just come and tell us employee welfare 5 million. How did you get that money? Tell us. And IFRS 2 is saying that what? Talk about the metrics concerning climate alone. Okay, how do you measure it? What are your targets? What do you hope to achieve? How is it progressing? Talk about all those things. So these are the 4 pillars. So it's saying that when you're reporting using IFRS S1 and S2, these are the things that must be in the report. So it's the same, just the IFRS 1 is saying cover everything. IFRS 2 is saying talk about climate alone. All right, so now let's now move on. Sustainable finance and equator principles. Now, sustainable finance and responsible investing aims to fund projects and companies that consider what? Environmental, social, and governance factors. So in this case now, what we're saying sustainable finance and responsible investing is saying that what? In this case now, people are no more just investing in business. Before now, what investors just want to know is the project, is it profitable? It's profitable. How much will I collect? Oh, what's my dividend? Oh, bye bye. It's good. I'm happy. Take my money. Bye bye. Go. No, it's not like that anymore. Now it's not like, okay, yes, project is profitable. Oh, that's good. How about the impact on the environment? Hey, you now start talking. So people are going a step further. Just like we said, sustainability is like it's going a step further. It's beyond profit now. We're not just concerned about profits, but let's say we said beyond profits. They did not say they are not concerned at all about profits. Profit is, that's why I said people profit and what, and the economy, peace and prosperity, right? So we are concerned about profit, but not just profit now. How does it affect other things? So in this case now we have like green, social, and sustainability bonds, loans linked to sustainability goals. So these are like those kind of finances that you have, you understand? So now one major global international principle of sustainable finance. Now there are many principles that people can use to check. Principles are like guidelines. So guidelines are like, okay, now when you want to fund a project, what are the things that you look out for? Or look out for this, look out for, ask question about this, ask question about that. So there's so many principles, but one of the most popular principles that people use when they want to assess if a project is actually going to protect the environment is equator principle. So equator principle is like a guideline. So let's look at what it is. Equator principles are voluntary principles that guide banks or lenders when financing project. So equator principles are voluntary principles that guide banks or lenders when financing projects to ensure that they only fund projects that are socially responsible and environmentally sound. So now in this case now, we're not just like we said, sustainable finance. We're not just funding projects. Oh, is it profitable? Is it MPV? Positive? No, we are going a step further. But then note, is a voluntary principle. It's not like by fire, by force, you must follow it. No. But banks and lenders are now using it. They're now using it to check, okay, what are the guidelines? Oh, have they done A? Have they done B? Have they done C? Okay, yes, good to go. You understand? So those are the guidelines, the principles that banks now use. Now, in practice, better principles work by having banks evaluate projects. So the banks, what they'll do that, they'll check the risk of the project, they'll look at environmental assessments, they'll talk about communities. If they say, this project is going to affect the XYZ community, they can even send some people there to check, how is it affecting you? So they are really taking it personal. It's not just taking. Then they'll check compliance, covenants in loan agreement. Also monitor the project. It's not like we just give you money and cross our leg and say, we'll give you money. It should be we have done assessment. No, we'll still be checking. So in Nigeria, CBN sustainable banking principles are the national mandatory principles. In this one now, CBN mandated it. It's not like equator principle that are just like the global like voluntary principles. No, in Nigeria we have mandatory principles that banks use when you are lending. So by fire by force, you must check. So while equator principles are voluntary globally, the CBN's sustainable banking principles make lending what? Mandatory. So it's mandatory. So this is the introductory aspect of sustainability. Yes, those 33 pages, that chapter 8 and all. So this is just like the summary of everything. So in the next video, I am going to show you how to analyze and interpret sustainability reports. I hope this video was helpful. If it was helpful, say something in the comment section. Just say something. And please subscribe, share this video to anyone that you know that will benefit from it. And I'll see you in the next one. Bye.